High inflation, high mortgage rates, and falling home prices. Oh my, what is going on in the San Diego housing market? We're getting after all that right now. Hey everyone, well, we've got high inflation right now. Mortgage rates are going through the roof again, and then housing prices continue to fall yet again. What does all this mean for you if you're looking at buying or selling a home here in beautiful San Diego? We're going to be covering all that in this video right now. And real quick, my name is Curtis Chism with the Chism Team, helping you both buy or sell homes here in the San Diego area. If that's something that you're looking to do, please reach out to me. My team and I would absolutely love to serve you on your journey of either buying or selling, whatever that might look like for you. So please reach out via phone, text, or email, and let's have a conversation. All right, let's get into what's going on with the housing market here in San Diego, especially with all the things around high inflation, high mortgage rates, and falling home prices. So first of all, let's take a look at the falling home prices. San Diego did fall. The San Diego housing prices did fall yet again in the month of August, and it went from about $969,000 as a median price all the way down to $910,000. So that is a fall of about 6%. We're actually down about 9% from the high a few months ago of $1 million. So we were at $1 million about 5 months ago. And for 5 months straight now, we continue to have falling home prices down to $910,000 or a 9% fall. Now we are up 7% overall from year over year. So we haven't lost all the gains from last year and certainly not all the gains from the year prior. But as far as where we were at the high just 5 months ago, we are down 9%. Now, condos are actually faring a little bit better. They are down from a high of $670,000 about 4 months ago, down to $625,000. Now, the prior month in July, they were $630,000, so they only fell $5,000. So just over, about 1% or so, a little over 1% they fell month over month. Overall down about 6.7% from the high of $670,000 to $625,000. Now, that being said, the days on market are also rising. We were at about 20 days. They've been steadily increasing. Now we're at 28 days on market. So that's the average that every single home in San Diego County takes to sell is 28 days. Now, I've been saying for quite a while that any hot home is still selling over the first weekend. That still remains true. If it's a really well marketed home, very well priced, it is still selling very quickly. That being said, most homes are at least taking a couple of weekends to sell. So that was unheard of for the last couple of years, but that's actually more of a normal market to take a couple weeks, a few weeks to ultimately sell a home. So we're heading back into a much more balanced market that we're seeing here in the San Diego home prices. Now we're also seeing a much lower final sales to list price. That's what the house was originally listed for, and then what it ultimately sold for. So for quite a while during the whole COVID pandemonium that we were having in the San Diego housing market and nationwide, we were seeing anywhere from 101 to 107% final sales price to list price. So that meant if you were selling a home for $1 million, at the height, you were getting $70,000 on average for that home over the original list price. So right now that's actually fallen quite a bit. Last month, it was just over 98% of a sales to list price, and now it's at 96.4%. So that's actually down quite a bit. Now, a normal balanced market is typically right around 98%. So when I see 98%, I think that's just a balanced market. Falling below 96% shows me that there's more of a buyer's market happening right now. I do believe that a lot of this has to do with homes that simply were way overpriced to begin with. And I've been saying this for a couple months. I've been talking about the housing correction since March and April of this year, that it was coming, and it started to catch up to us in May and June. So we're starting to see these numbers from June where sellers were pricing their house in June based on earlier data, thinking they could get a ton of money for their homes. And they just got caught in the crosshairs of everything going on with inflation, mortgage rates, and now, of course, the falling home prices, that they've had to rapidly and drastically reduce their prices. And so that's where you're seeing these more drastic drop-offs in the median price and in the final sales to list price, showing more of a buyer's market. So I do think that we are going to start seeing that balance out and trend back up into the 98% range. I don't think we'll get back over 100 anytime soon, because we are certainly much more into a balanced market at this time. And that's what we're seeing, boots on the ground, talking with fellow industry professionals, the offers that I'm making for folks as well. There is a lot more buyer activity happening right now than there had been for the past few months prior. And that's because people are still seeing the overall value in real estate, that ultimately it is a good investment if you're not trying to time the market perfectly. People still have to have a place to live. People are still making moves. So I would consider this at the moment more of a balanced market than a full-on buyer's market. But in certain areas of San Diego, it certainly is a buyer's market. And in other parts, it's really more of a strong balance to seller's market. Again, I talked about this in the last video about Ocean Beach and a particular client I'm working with. We were just getting beat out time after time, making very aggressive offers. And finally we got our offer accepted, but it was kind of an interesting home where it occurred where this listing agent just was not actually allowing very many showings. There was a tenant involved. They didn't want to disturb that tenant because the tenant and his wife had cancer, recovered fortunately, but just didn't want a lot of people through. So there's very, very low traffic on this home because of the scenario. So we were only up against a couple other bidders, and we were able to get the home over list price, but we're able to keep our inspection contingency, although we did still waive the appraisal and loan contingency, but we did also get credits. We got $20,000 in credits to help offset some needed repair costs that we knew were going to be coming. So that basically covered his closing costs completely. So it just really depends what specific market and the specific house. It's house to house, street to street, neighborhood to neighborhood, as far as what's going on in the market and what you need to do in order to get your offer accepted, or how to price your home and sell it correctly. I'll dive into that in just a little bit more. We are seeing overall lower activity in the market, even though buyers are starting to come back in. The data is showing us overall we're down about 30% in both pending sales and closed sales, but new listings are also down too by 24%. So new listings down 24 and closed and pending sales down 30% as well. So again, though, we are seeing buyers starting to pick back up in the market. So I think it'll be interesting to see where that trends, but overall we're down, which actually is just more consistent with pre-COVID numbers. So these are scary things to me. Of course, having a 9% drop in median price is a serious bummer if you bought at $1 million, but this is where I continue to harp on: do not try to time the market, because real estate does go down. I have videos where I talk about this. Real estate does go down. Real estate agents do not want to tell you this. They want to say that things are going to appreciate forever. That clearly is not true. And I've been talking about a housing correction coming, and it's happening right now. Now, how much further is it going to go? That's the big question. And if someone tells you that they know what's going to happen, they are lying to you. You need to fire that agent if you're working with that agent. I will give you some of my thoughts on it. I said last month I didn't know where they're going to go. I believe that they were going to continue to correct downwards. I had said a couple months ago I believed we were going to be correcting by at least 10%, and that's where we're at right now. We're at basically a 10% correction, 9% technically. So I believe that it will continue to correct, especially as this new information comes out and people are concerned about, there's a lot of headlines out there right now about this huge burst in the real estate housing market. I would not call it a burst, and I'm going to go into some reasons why it's not going to just drastically fall. So I do think that it will continue to correct here in San Diego, but overall it is going to stabilize very soon. So here's what my thoughts are as far as why it's not going to just fall drastically. There are a lot of institutional buyers in the market. There's actually a large investment company right now, Blackstone, that is preparing a $60 billion fund to buy single family residences as housing prices fall. Now, a lot of investors have put buying on hold because they're waiting for prices to come down so then they can start snatching them up. There's also local investors. There's a big investor I work with here in town. They flip about 120 homes per year, and they paused buying for several months while they kind of waited for things to settle out, but they are back buying again. Now they are factoring in some more declines in prices in their purchasing, in their numbers. So they're not offering, crazy amounts of monies for home because they have to hedge their bets, but they are back in the market buying. And so that is going to be a big factor in preventing home prices from falling too far, because there are institutional and investors, so Wall Street investors and then smaller mom and pop, smaller investors that will be buying up homes, and that's going to keep prices from falling too far. There are still going to be buyers. The reason why prices would fall significantly is simply because there are not enough buyers in the market. It's supply and demand. Right now, demand is definitely down. Supply is also coming down again, but the demand will not go away completely because of these investors that are coming into the market. Now, let's dive real quick into inflation and mortgage. So we don't have, at the time of recording this, the newest inflation data. It does look like it's going to drop just a little bit down to, they're estimating about 8.1%. We'll see where that comes in then. If that throws things off, it comes in higher, but it looks like about 8.1. The Fed is committed to targeting a 2% inflation rate. So they are going to continue to increase rates to try to dampen down the economy to get down to that. Now, I've talked about inflation rates and mortgage rates and how they're tied together. Right now, mortgage rates are actually, at the time of recording this video, back up to 6.25%. A month ago, when I recorded this last video, they were down at right around 5.15%. So they were up 1% in a month, but it's highly, highly volatile. They are changing, mortgage rates are changing rapidly day by day. There are quarter point swings day to day. Just 2 days ago when I was looking at rates, they were 5.75. Now they're 6.25, up 0.5% in just 2 days. But they could be down to 5.75 in another day or two. So it's really quite volatile. A lot of this has to do with the bond market, actually. So there's so many things that affect mortgage rates. It is not the Fed that's the sole driver of interest rates. It's not even inflation that's the sole driver of interest rates right now. It's the bond market that's driving interest rates right now. And it's extremely volatile. Everyone's talking about, well, mortgage rates are all over the place. So if you are looking at buying, try to rate lock where you can at one of those lower interest rates. I do know of a program right now that is an adjustable rate mortgage. Now hear me out before you freak out on adjustable rate mortgages. And I had one product through another credit union that's gone away. They've used up all their funds. I have a new product through another credit union that's offering some really fantastic ARM credit mortgage rates right now. And what they're offering, I just had a client locked in on this, and it's a 3.75% ARM. Now, APR is more like 4.5%, but still 1.5% below 6%, 6.25, 1.75% below that. So here's the thing about these ARMs. This is not like the old days where you had these ARMs that you would adjust after 3 to 5 years, and you have these massive mortgage payments you gotta make. These are much more stable loans that are being made right now. This is a 5-5 ARM. What that means is that for the first 5 years, it's locked in at that 3.75% or the 4.5% APR. And then at 5 years, it can adjust up by a max of 2%. So for round numbers, if you're at 4.5% APR, the max that it can adjust to in 5 years is 6.5%. So a combined average over 10 years, you're gonna have a 5.5% interest rate. Now, of course, if rates are down, it can adjust down too. So most people only stay in their homes an average of 7 years. As of late, it's actually gone up. More people are staying around 10 years. But in 7 to 10 years, you're most likely going to have moved or refinanced. And here's the big thing right now is that most people, most experts, I'm not a huge believer in experts, but you got to follow them in the real estate world too, is that they're expecting mortgage rates to drop to about 4.5% by 2023, mid 2023 for 30-year fixed mortgages. So you could get into a 5-5 ARM where you know you have a fixed rate of an APR of 4.5% for 5 years. And then in a year, you could refinance into a 30-year and lock in that 4.5% for 30 years. And of course, you can always refinance again at a later date. What does all this mean if you're looking to buy or sell a home? The big thing if you're looking to sell a home right now is that you have to price very strategically and aggressively in order to sell your home. So you definitely do not want to treat this as if you're selling a car. You want to treat this as if you're selling a home. They are two completely different things. A lot of people will go into this and say, I'm gonna try to price it way up here and see what offers I get, and then I'll get negotiated down. That is not the way to sell a home. You wanna start on the lower end and start driving up the price. That brings in a bigger pool of bidders to drive the price back up. When the home sits on the market at a high price, your buyer pool is very small, you're not getting a lot of views and traction, and your home is gonna sit and it's gonna drive the price down significantly versus starting lower and driving it back up. So but it's house to house again, so you have to be very careful and talk with a real estate agent. Please talk with me or a member of my team, and we will help you price your home strategically and sell your home quickly. If you're looking to buy, again, it's house to house. Some homes are still selling for over list price. Other homes are selling for under list price, and you don't have to give away the farm in terms of throwing away all your contingencies, your appraisal contingency, your inspection contingency, and your loan contingency. And you often can get credits right now to actually help offset your closing costs. So if you are looking to buy or sell a home, please reach out to me. We're happy to sit down with you, take a look at your information, what you're looking for, and whether that's buying or selling, and we'd love to help you. Please reach out via phone, text, or email, and we'll see you on the next video.